Today we bring you the Bay Bridge edition of Apartment Market Dynamics from MPF Research. We'll talk the long-term changes in apartment rents generated in the San Francisco metro area versus the metro Oakland area and where that relationship might go. Two markets, so you get two analysts. I'm Jay Parsons, and I'm with Greg Willett.
And Jay, we are calling this the Bay Bridge edition, and I'll once again demonstrate our mastery of Wikipedia and share a few interesting tidbits about the Bay Bridge. Completed in 1936, so we've had 77 years of colorful history, and that includes in the late 60s, it was hit by a naval training plane, and then maybe most notoriously during the 1989 earthquake, this double-decker saw the top part collapse on the bottom in a big chunk of it. But for the most part, it is a reliable link between San Francisco and Oakland, and you do have people who commute back and forth across there every day, and that tends to be folks who have opted for the lower-priced housing in Oakland, and then they come to work in San Francisco.
And let's track that pricing difference and how it's changed over time. We're going to start back in the 1993 to 95 timeframe. These are the pre-tech boom days. Back then, San Francisco rents ran on an average of 31% higher than Oakland prices. And look at what happened in the late 1990s. The premium for San Francisco moved up a ton, topping out in that cycle in early 2000 right at 50%. So San Francisco benefited a lot more than Oakland from the tech boom. Now that's obviously not a surprise, but it's interesting to quantify the difference, even if it's an obvious statement. However, San Francisco was hurt more in the ensuing bust because it had benefited so much in the boom. So by 2004, 2005, that relationship in rents between the two markets was back where it started, a premium for San Francisco that was right around the 30% mark. And then we began another expansion pattern all over again in 2006, and for the past 7 years, San Francisco has pulled further and further ahead of Oakland for apartment rents. Right now, rents in San Francisco average $2,498 a month. That is 60% more than the norm of $1,565 in Oakland. So the premium now is actually higher than it was during the initial tech boom.
60% is actually a number that surprised us as we looked at that, and more than you would expect, and more than you tend to see in other places where you've got neighboring metros and you could live in one and work in another. A couple of comparison points for you. In Washington, D.C., the price premium is about 36% over what you would pay on average rents in Baltimore. For Dallas over Fort Worth, the difference is only about 15%. The one that would be much bigger than the Bay Area is Manhattan over other parts of Metro New York or northern New Jersey, but Manhattan's just a different world, and it's really the outlier on pretty much anything you would want to measure.
Absolutely. So the obvious question for you, Greg, is that will this rent difference between San Francisco and Oakland continue to get bigger over time, or are we going to see a correction like what we saw after the tech boom in the early and mid-2000s?
Well, the short-term answer is that we think that over the next couple of years or so, rents are going to grow at about the same pace in these two places. We're here in Texas, and we know that if you want to slow down rent growth, what you do is you build a whole bunch of supply. And that's about to happen in San Francisco, but not in Oakland. So the premium cooling off a little bit in terms of the rent growth pace for San Francisco. As you look to the longer term, though, I would think that, in fact, San Francisco is going to be the stronger rent growth performer, and that goes back to the local economy. Even if the tech jobs don't continue to spiral as they are right now, with just huge growth, what you'd see in this one is you tend to cycle out some low-paying jobs out of San Francisco, but at the same time, you cycle in high-paying jobs, and not just in tech, but in areas like finance or the top end of the professional services market or the top end of healthcare.
Hey, Greg, let's wrap it up with one more Wikipedia stat for you. About 280,000 vehicles now cross the Bay Bridge on a daily basis. And Greg, I'm no expert in logistics, but that's a lot of cars. And with the pricing difference between Oakland and San Francisco, I don't think it's too much of a crazy bet to say that commuter traffic is only going to get worse. So that wraps us up for the Bay Bridge. Until next time, for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching A Part in Market Dynamics.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.